All right. In the world of Indian two-wheelers, it's a real battleground. And right now, two names are just dominating the headlines, TVS Motors and Hero Motocorp. But who's actually winning the race? Well, today we're going to dig into the numbers and find out. Let's jump right in. The whole two-wheeler market in India is just booming right now. I mean, we've had a strong monsoon, which is great for rural incomes. The cities are back to their usual buzz. And really, everyone wants their own ride. It's basically the perfect storm for a major showdown between these two giants. So let's meet the players, right? On one side, you've got this challenger that's super hungry for growth. And on the other, you've got the reigning champ. Let's get to know him. Okay, first up, TVS Motors. You definitely know their bikes. We're talking about the super sporty Apache RTR and the scooter everyone seems to have, the Jupiter. They are a huge force in the market for sure, but they're going up against a literal giant, Hero Motocorp. And I don't just mean they're number one in India. Nope. They are the world's largest two-wheeler manufacturer. I mean, with bikes like the Splendor and the Passion, you see them on pretty much every single road in the country. So where do we even begin this comparison? Well, let's start with the most basic question, right? Who's selling more? And, maybe more importantly, who's growing faster? Let's kick off the sales showdown. And wow, the numbers here really do tell a story. Just look at this. In the second quarter, TVS saw its sales leap by a massive 24% year over year. That's huge. Now, Hero Motocorp, they also had solid growth, don't get me wrong, 16%. But TVS is clearly ahead with an 8-point lead. That is a very strong start for the challenger. And hey, this isn't just about jacking up prices. This is about actually selling more bikes. TVS's volume growth, that's the number of actual bikes they pushed out the door, is up by an incredible 22%. Now get this, that's literally double Hero's 11% growth. So yeah, in this first round, the growth round, TVS is the clear, undisputed winner. Okay, but hold on. Growing super fast is great, but it's only half the story, right? A company has got to make money. So the big question is, how do these two stack up when it comes to actual profits? Let's dive into the profit equation. At first glance, it really looks like a dead heat. When you look at their operating margins, which is basically a fancy way of saying how well they run their main business, both TVS and Hero are totally neck and neck. They're both hanging out in that 14 to 15% range. So you'd think, okay, they're equally good at making money from selling bikes, right? Well, not so fast. Because this is where the plot thickens. Big time. When we look at the net margin, that's the final profit after every single bill is paid, the picture flips completely. TVS has a net margin of 6.0%, but Hero Motocorp, they're sitting at a much, much more impressive 10.8%. To put that in perspective, for every 100 rupees of sales, Hero gets to keep almost double the profit that TVS does. So, this brings us to a really interesting question, doesn't it? How on earth can the company that's growing so much faster be so much less profitable? What is going on behind the scenes here? Well, the answer really comes down to costs that aren't about building and selling bikes directly. See, TVS has higher expenses from things like depreciation, their assets losing value over time, and interest payments on loans. All those little costs are just nibbling away at their profits before they ever get to the bottom line. And that's what explains that huge gap in net margins. So what we have here is a classic showdown, right? It's the growth superstar versus the profit king. And that brings us to our final and maybe the most interesting question of all. How does the stock market see these two very different companies? It's time to solve the valuation puzzle.
Okay, this valuation scorecard is really fascinating. Look, the market is absolutely in love with TVS's growth story. Its PE ratio, that's price to earnings, which basically tells you how much investors will pay for each rupee of profit, is way up there at 69. That's a lot, but here's the kicker. When we look at something called the PEG ratio, which actually takes growth into account, the story changes. Now, a PEG ratio under 1 is usually seen as pretty good. Heroes is 0.92, which suggests its stock is priced pretty reasonably. But TVS? It's at 1.76. That tells you that investors are paying a serious premium for that growth. So where does that leave us? Well, it really boils down to a classic choice, the kind of choice every investor has to make. Do you bet on TVS, the high-octane growth story that comes with that really premium price tag? Or do you go with Hero, the super profitable, steady market leader that has a much more down-to-earth valuation? It's the ultimate trade-off, isn't it?
Explosive growth versus rock-solid profitability. There is no single right answer here. So we're going to leave you with this final thought. Based on everything you've just seen, which horse would you back in this race? We'd love to know what you think.